We appreciate all of the guests who have appeared on our show and sincerely thank them for providing you, our audience, with useful information. However, the advice our guests provide is theirs, and we encourage you to seek out a professional if you have specific questions about any topic we cover on the Crushing Debt Podcast. On this week's episode of the Crushing Debt Podcast, The Wealth Architect.
Welcome to the Crushing Debt Podcast with your host, Florida attorney Sean Yesner, where our goal is to help you get rid of the financial bullies in your life.
So welcome back to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner, owner and founder of Yesner Law, and I'm happy to bring you another guest this week. However, before we get there real quick, I do want to talk about one of our two sponsors for the show. I'll talk about one now and one at the end. So the sponsor is our longtime sponsor, Sam Cohen. He owns Attorneys First Insurance. They write malpractice coverage, E&O coverage, professional liability coverage, all the same thing for attorneys and title companies basically all over the country. So if you are starting up a new law firm or if you are starting up a new title company and you have questions about your E&O insurance, your errors and omissions insurance, you can contact Sam at attorneysfirst.com, or his website is attorneysfirst.com. Sam's been a longtime supporter of the show. He's been a longtime friend and mentor and supporter of mine, so we really want to be able to support him. So again, Sam at attorneysfirst.com or just attorneysfirst.com. However, I want to turn my attention to my guest. I'm excited about my guest. I got some questions I want to ask him. He is the Wealth Architect, a lifelong learner, author, course creator, mentor, and fund manager. He's traded over $14 billion worth of securities, $14 billion with a B. Using his experience and expertise, he is on a mission to change the way that we invest. Welcome my guest, Mark Yegge. Welcome, Mark.
Thank you, Sean. Looking forward to hanging out with you today.
Yeah, absolutely. So one of the first questions I kind of wanted to ask you right off the bat, when I was reviewing your bio and preparing for today, one of the line items in your bio is that you started investing at 12.
Yeah.
So how did you get into investing, and what did you do at that age to start investing?
Well, that's going back a ways, but my dad was an entrepreneur and he believed in the concept of education and, doing things yourself and having control. And he was an entrepreneur and his dad was an entrepreneur. And I suppose it went all the way back. So I was an entrepreneur when I was a little kid. My dad was having me mow the lawn. I think it was really more controlled slavery, but I was getting $5 a week or whatever. And then I started cleaning the pool for another $5 a week. And pretty soon I was like, oh, I'm getting paid. And then he made a suggestion to get paid around the neighborhood. So I had this little business going. And then every day I would come home and my dad would be sitting there in front of the Wall Street Journal circling stocks in the paper. And I finally, at 12 years old, I guess, I was like, what are you doing? And he told me this is a way that you invest in companies. You invest in companies like you have a little company. People can invest in you. So I was fascinated by it. He started to teach me about it. I bought my first stock when I was right around that age. It was a company that I'd never heard of, but it fit the criteria of all the stuff that my dad taught me. And it was a company called Allegheny, which was a women's clothing store that I'd never heard of. But it was a $3 stock, or I think, was it $3? Anyway, I took 100 shares with my $300 that I had saved up. And I bought this women's clothing store because it had a low PE ratio, blah, blah. And it doubled. And I was like, wow, this is cool. So my money's working for me while I'm out there mowing lawns and coming home from school and doing my homework, which I never did anyway. But anyway, so one thing led to another, and pretty soon, the next stock was this little company called Allegheny Airlines, and I saw a commercial that said, Allegheny Airlines is becoming U.S. Air, and I was like, that's a cool name for a company, U.S. Air, United States Air. I didn't know what I was doing, but I bought it at $17, I remember, and it went to like $35. So I doubled my money again. I'm like, wow, this is easy. So it's like when you go play golf, right? And you hit your first drive down the middle and you think, you're Tiger Woods and everything's going to be easy from that point. And then the next 9 go into the woods. But I was basically hooked, and I started to learn from distant mentors, I call them, because my dad had all these investment books on his bookshelf. And I started to learn these techniques. And one of the techniques I learned was about covered calls. And it was a book called Beat the Market by Edward Thorpe. And that is essentially, here we are 40 years later, has shaped the programs that I teach and the programs that I use in my hedge funds. And I I love investing. I love the ability that empowers people to do it, because anybody could do it. Now you can open up an online brokerage firm with any amount of money, click a mouse, and you're an investor. So that's a double-edged sword, but that's how I got started when I was a kid. I've been doing it ever since. I'm in love with the market.
Wow, that's I keep noticing the similarities between us. So not only the facial hair and the lack of hair on top, but and those of you that this is an audio podcast, so you can't see that we're both bald. With Mark's got a goatee, I've got a full-on beard, and probably need to shave. But the thing that is also interesting, my dad did the same thing with me, and so I started mowing my lawn for my parents. I started cleaning the pool for my parents. The difference was, even though my dad is also an entrepreneur, he never pushed me, and I never thought to create that as a business. When I graduated and went away to college, he hired somebody to do it for him. I'm like, wait a minute, that's not, you paid me to do it, and then I leave, you pay somebody else to do it, which I think in and of itself is another lesson there. And
you could have sold your business.
There you go. I sold the business and I guess I got a college education out of it. So it was a fair trade. And then my first stock I bought when I was 13, was actually gifted to me, was AT&T.
Okay.
And so I learned, it's split and reverse split. And so how does that work? And what is that? And reinvested the dividends and all that kind of stuff. So
didn't they break it up after you had it, or was it before that?
After. So
you got a bunch of different stocks then.
Yeah, I ended up getting a bunch of different stocks, and it was only 5 shares. And so eventually I got this check from AT&T that said, you don't have enough anymore, so we're cashing you out. Here you go. But still, I would invest and reinvest the dividends. And so very, very similar issues. And then jump forward a few years, and I guess probably the same kind of story, same kind of analogy. You ended up buying your first car when you were 16. And then the other thing that I was really interested in talking to you about, jump forward a few more years, you retired, quote, retired at 39 after selling your Wall Street software company. So I think what's really interesting to me, what I want to know more about is, how do you start, build, and sell a business? Simple question, right?
Yeah, real easy, right? Well, that wasn't my first business. Let's just say that. And it certainly wasn't my last. But let's just start with the first thing that pops in my mind is that you have to kind of fail forward, right? You're learning along the way. You're building the airplane as you're taking off from the runway, basically. But it was a lot of work. And when you can do something that you really enjoy doing, that you have a vision and a passion for, it's not a lot of work. So it was a fortunate thing. We said, work like nobody else will for 5 years, and then you can live like nobody else can for the rest of your life. And that's kind of how we built our company. We worked 18 hours a day and built this thing up, and then got acquired by a large Wall Street firm. We were in the financial services business, the stock brokerage business, and I had all the licenses and all that stuff. But it really comes down to, having a vision, knowing where it's going, although we had to make shifts constantly because, you want to make God laugh, you got to tell her your plans. And then, we were shifting all the way around, and, we finally just kept making good decisions and kept pushing forward and built a nice, successful company. So I don't know how much you want to get into that, but that company has spawned other opportunities. When I sold that company, I basically was a little lost because I was like, okay, I got a bunch of money now. What do I do? So I started working on my handicap, and I realized that took a lot of time and it wasn't that rewarding. And so I started a solar company. I started several other companies after that, and then realized that I needed to go back to my passion of really investing. And so I've been investing for other people, and I've been building financial education systems ever since that period of time.
Wow. So one of the things that occurred to me in there is this concept of balance. And so, I don't want to put you on the spot or anything, but, a lot of the longtime listeners know I've got 2 young kids. My oldest is, as we record this, my oldest is 10. My youngest is going to be 8, it's wife, kids. And I keep thinking to myself, when I started the law firm, it didn't matter. I hadn't met my wife yet. I didn't have kids that I knew of. So, I could work from 7 a.m. till 8, 9 o'clock at night, and I could grind it, and I could do all that kind of stuff. And I probably still could today. Now, 18 years later, I could probably still do that, but we're recording on a Friday. I want to go home and I want to spend time with my wife and kids. So how do you incorporate the balance in there?
Well, it's interesting because if you'd asked me that same question 20 years ago, I would have said there is no balance, right? You have to do what you got to do to put yourself in a position to do well. But I read a book by Tim Ferriss, I don't know, maybe 10, 15 years ago, something called The 4-Hour Work Week.
Yeah.
And there is no 4-hour work week. Let's start with that. But the concept is do the stuff you're really good at doing that you like to do and outsource everything else to somebody else. And that allows you to have that balance, that work-life balance that we call, right? Because I think over time, you're going to get the balance. The problem is most people exchange all their time for money in the beginning of their life. And at the end, when they wanted to exchange their money for time, they end up exchanging their money for their health, right? They have to buy surgeries and drugs, and they don't, their hips are creaking like, and they're not able to do the traveling that they thought they were going to do and the cruising that they were going to do. And that last period of life is very short. And you spend most of your money that you worked so hard for spending it. So I believe in the balance along the way. I think what happens is we're programmed. So first of all, my basis is that we don't really have financial education anywhere unless we make it an elective, right? We have to start taking seminars and learning things and reading Dave Ramsey and Susie Orman. And, why aren't these things taught in school, right? But Shakespeare is taught in school. I'm an expert in Shakespeare and I'm an expert in the Pythagorean theorem, but I never use them. But I use money every day. So my pet peeve is that I think people need to have some financial education. Unfortunately, they have to do it outside of an institutionalized environment. So that's where we step in. And now I'm getting away from your question, but the fact of the matter is work-life balance is critical, but you have to be able to, along the way, figure out ways to create passive income so that you can enjoy your family, you can enjoy the fruits of your labor, and don't just exchange your time for money and then take that money and save it. You have to save it, then invest it prudently, and have that investment create that passive income.
And so
that gives you that balance.
Right. So a lot of what you do, or a lot of what you're doing now, is using the stock market to create that reliable, consistent passive income. So how would someone do that? If someone hasn't really started investing yet, what would be the first step?
Well, the first step is to learn. So I have this thing called the cycle of learning and cycle of money. And it starts with learning, right? We all learn. We go to school, we get an education, you've got a law degree. These are all supposed to be tickets to helping us make more money. Our whole societies are based around consumption and money and things like that, which is unfortunate. But that's what we're geared for. So you have to learn, but learning's not going to get you anywhere. You've got to earn. So you're trying to earn a bit more money, but earning doesn't get you. Most people just earn, and that's where they stop. They don't save. But you're never going to save yourself to wealth or passive income. You have to now invest it. So once you invest it, that's the part where you have to learn how to do it. So to answer your question is there are ways to invest. You can buy a vacant lot somewhere in the middle of nowhere and then, hope that it goes up in value. And with inflation going the way it is, it's probably going to go up somehow, but it really doesn't go up in real terms. And that's one way to invest. But I believe that you should try to structure your investments toward passive income. Most people use real estate toward passive income. I use the stock market. My dad was a big real estate guy, but he did teach me the stock market. He did really well in real estate. I, unfortunately, understand it, tried a lot of investments in real estate, but it just seems like it takes a long time to invest. You got to grab a plunger at 2:00 in the morning and go clean somebody's toilet. It's not very passive for me. I'm not saying there's anything bad. There's a lot of great things about real estate. But for me, to be able to sit in front of a computer, evaluate a company, put in a system that creates reliable income, and have that income compound on itself and create passive income, to me, that's kind of the holy grail, at least for me and the people that are in my program for investing.
Okay, so you've got, and that was going to be one of my next questions is, without getting into anything necessarily proprietary, it sounds like what you do is a lot of research in terms of how to evaluate the company to determine if you want to buy stock in that company.
Well, I mean, that's the beginning of it. So let's see. I'm going to give you an analogy that's based on real estate because most people really understand real estate because we all live in real estate, right?
Right. And
let's imagine that you open your window and you look across the street and your neighbor Jim has a big piece of property that has got a sign on it. It says for sale, $100,000. So Jim's got $100,000 in this property and wants to sell it. And this guy, Bob, goes driving down the street. Bob has some information that right next to Jim's lot, this big, huge Hilton resort is going to go up. So he believes that Jim's lot is going to be worth not $100,000, but $1 million if the Hilton builds right next to him. So he doesn't have the money the $100,000 to go to Jim. So he says, hey, Jim, listen, I'll give you $10,000 if you'll tie up your property and not sell it to anybody but me anytime in the next 6 months for $100,000. And Jim says, wait. You're going to give me 10 grand and I get to keep it no matter what. And the only thing I have to do is not sell it to anybody except for you for the same price that I'm asking. Bob says, yeah, that's what I'm offering. They shake hands and now you got your deal. Two things can happen. Number one, Bob was right. And they're going to build this huge Hilton hotel. It comes out in the paper. And now that property is worth $1 million. Bob took his $10,000 and turned it into $1 million. Low risk, pretty high reward. Or we'll talk about the low risk, right? But a pretty high reward on his $10,000. But you and I both know that information is often imperfect. And that was just a rumor. And if he were so smart, then Jim would have already known about it. And that doesn't happen. Well, in this case, he lost his entire $10,000. The property didn't go to $1 million. So why would he now want to spend $100,000 they didn't have anyway? So Jim just got to keep the $100,000 and the property and could put it back on the market for $100,000 again. So what Jim did is he took the least amount of risk. He would give up the upside, but he got to keep that $10,000 no matter what. And he got to keep the property no matter what. And he lowered his basis or his risk in his property by 10%. Now he's got a $90,000 piece of property that he could sell for $100,000. So that's the real estate analogy. Now, what we teach people to do is not be the gambler, in this case, Bob, the guy that thought he was going to make all this money. We teach you to be the house, really, right? So you're the house. You get to collect the $10,000 no matter what. And after 6 months, you can go find another Bob, or Bob maybe wants to renew. And so you can collect that $10,000. We can do the same thing in the stock market. If you own Apple or Facebook or Tesla or Amazon or any stock really that has options against it, you can find a gambler like Jim to buy an option from you, which means you get to collect that premium in exchange for tying it up for a week or a month or some period of time to buy your stock at a predetermined price before a predetermined time. 80% of all options that are bought expire worthless.
Wow.
Well, there's somebody on the other side of that trade.
Right.
That means 80% of all sellers make money. You always get to keep the $10,000 that Bob, Jim collected, that Bob paid, but that helps you lower your basis. So we create income from the stock market in that way, lowering our basis, playing a little bit of defense, but we're also creating passive income in the process. I know it's a little bit, long explanation, but that's essentially what we do. And we have a full system around it. It's called Covered Calls. You can go to YouTube and find a zillion videos that are for free for covered calls. But anybody can find free information on the internet. It's not always worth what you pay for, which is nothing. So you have to have a system around it. You have to have a system of rules around it, because systems with rules keep your emotions in check. And emotions are the enemy of the trader. I always say that when emotions go up, intelligence goes down. Right. And vice versa, right? Some of our worst decisions in life are made from our emotional state. And so we try to eliminate that emotional state by saying, look, we have a time-tested, proven system. You employ these rules, and that way you can make unemotional decisions when the market's open and it's crazy and it's time to make a decision.
Yeah, and that's a lot of times emotion. You're right. Emotion does play in. And one of the things that I was thinking as you were going through your example is if that property does hit and that hotel does get built and the property does go up to $1 million, a lot of times Jim will call me and say, wait a minute, I signed this contract to sell this guy my property for $100,000 and now it's worth $1 million. What can I do? And unfortunately, a lot of the time is you sign the contract. You got to sell it to him for $100,000. Yeah. So that's emotion does play into it a lot. So we talked about real estate. We talked about stocks. I've always said that a good investor sort of spreads out, makes his investments more diverse. Yeah. How do you think crypto plays into all of this?
Oh, I love that. So I believe every investor should have a diversification among assets and a concentration within assets. That's part of my philosophy is, Warren Buffett doesn't go out there and buy mutual funds with 500 stocks in them. He focuses down on, really quality, good stocks. So he doesn't believe in diversification. He's one of the best investors of all time. I'm going to listen to him. But I believe everybody should have a little bit of real estate. I believe you possibly should have some gold and maybe silver and frankincense and myrrh and whatever else they have. And you should probably have some, you probably, if you have a business or a business debt or a side hustle, you should have some money. You're betting on yourself in that case. And then you should have what I call tech assets. And tech assets are things like Bitcoin and other cryptocurrencies, Bitcoin being, to me, the best one in the monetary environment because it's got a scarcity component. There will only be 21 million Bitcoin ever made, and they've already made 19 million. So over the next 110 years, they're going to make the other 2 million. And so that scarcity component, as you know, when there's something scarce, the value of it goes up. And so I believe that, if you put money into Bitcoin, just a little, you don't have to have a lot. First of all, by putting $1 into it, you're now involved in the market, which makes you want to learn more about it. Second of all, it's going to be a great hedge for inflation. Right now, it's not proving to be an awesome hedge for inflation, I'll admit it. But I think people aren't getting it. To give you an idea, I don't know if you've heard that El Salvador has become the first country to adopt it as their legal tender.
I did hear that, yeah.
They were using the dollar and they realized that the dollar is being debased by the Fed just printing all this crazy money. Like more money was printed in the last 18 months or last 2 years than was printed in all of the history of the United States.
Right.
So it's just completely debased. And they were riding on this dollar being their currency. And they said, wait a minute, they got a millennial guy that's running the country, very beloved by the citizens. And he said, hang on, if we're going to hang our hat on the dollar, we're not really smart. We're a third world country. Let's convert to Bitcoin. So I went to El Salvador. It was never on my list, right? But I'm a traveler and I like to go. And I said, listen, if I'm running a cryptocurrency hedge fund, I need to go find out what's going on in ground zero. And I brought this thing here with me, this phone. And I was so amazed that these third world people, and I went to stay on this place called Bitcoin Beach. It's called El Zonte is the name of the beach, but they've kind of renamed it because everybody takes Bitcoin. And I went and bought a dinner. I bought a nice dinner for $3.75 or whatever in this little third world country. And here are these third world people. I said, do you accept Bitcoin? Of course. They'd put the price in for the dinner, $3-4 or whatever. Show me the QR code. I'd put it in my camera, hit send, and boom, I made the transaction. Now, if they can do it as a third world country, uneducated, if they can see it, then we should be able to see it. And really, we're not the use case for it. It's the 70% of the world that is unbanked, that has no way of transacting money back and forth. But going back to the United States, because most people are listening to us from, the US and Western countries, we have also an ability to invest in Bitcoin as a store of value, as a medium of exchange, as a way of hedging inflation. There's a lot of really great benefits that I think are going to come to the fore in the next year or two that, I'm very, very bullish on that. Yeah. So it's just a part of your portfolio. I always tell people, invest enough that if you lose it all, and it could go to zero, that if you lose it all, it's not going to change your life. But if it does what I think it's going to do, it's going to change your life.
Exactly.
That's what I tell people to do. So it's fun.
Exactly. And we talked about emotion and we talked about that type of stuff. And I think that also touches on the mindset of investing. And I think that also plays in, like you said, invest in crypto, but not enough that if it goes to zero, you're going to lose everything. Invest in real estate, but not enough that if, I don't know what we've got coming up. Most people think a correction, a bubble, a crash, whatever it is. Sure. Invest in real estate, but not so much that if it does correct, you lose everything. Invest in the stock market, but not. So talk a little bit about mindset and how that plays into investing.
Mindset to me is 90% of investing. Because you could sit in front of a computer and be driven by emotions and try to day trade. And 95% of all the day traders, and I've had 4.5 years or decades of experience in doing this, I've seen a lot of people come and go in the day trading business, right? It's just really hard to sustain. But, if you can have a diversified portfolio, life isn't about sitting in front of a computer and making money. Right? Life is about adjusting your situation financially so that you don't have to wait till you're 65 or 67 to retire when you can barely walk and sit down and watch, Fox and Friends all day long. It's to be able to go out and enjoy your life. Well, why wait to 65 or 67? Why not shorten that period of time to your 40s and 50s and your 60s and really enjoy the life that you've built? You're already working anyway. Why not work a little bit for your future? And so to be able to do that, you've got to have a really clear mindset. It starts with financial education, and then it builds on that with the savings and the proper investments. And I always have a saying too, Sean, never give up your power in your health, your wealth, or your time.
Wow. And
most people, the stories, they go into the doctor and the doctor goes, oh, sorry, we found this in you. You got 6 months to live. And they go, oh, better get my affairs in order. And, 5 months and 29 days, they die. right? Because they gave up their mental power to that situation. Some other people go to get different opinions and they say, oh no, you could probably live a lot longer if you just change this diet. And that changes their mindset and maybe they live another 10 years. You know those stories.
Yeah.
If you give up your power in anything, you're putting yourself at victim status, right? We want you to be at least in control. You don't have to be the investor, but if you're going to give your money to a broker, at least know what they're doing. Most brokers are salespeople. And Wall Street is run by salespeople and attorneys. No offense, right?
I can't stand attorneys.
But attorneys are there's a valuable role that they play. They want the salespeople go out and collect the assets for the big Wall Street firms. The big Wall Street firms take it and invest it. They make fees, which are paid by the customer. And the lawyers are basically there to prevent them from getting sued. Right. And how do you prevent law firm or brokerage firms from getting sued? You shoot for average. So your broker is going to sell you into a program of, Mr. Johnson, what we're going to do is we're going to set you up in a nice portfolio of stocks, bonds, mutual funds, and ETFs. And those are going to make you, about 9-10%. And that's what you need. And, you'll compound over 6,000 years and, maybe you'll be able to retire one day. That's the program. And you can't sue them if you just make an average return. Right? Like what are you going to do? I got you an average.
Right.
But I don't wake up in the morning and go, I think I want to be average today. I wake up and I go, I want excellence. So if you want excellence, you should be trying to figure out excellent ways to invest. And that means that you have to kind of do a little homework. Well, anything that's worth doing is worth doing right. So that's where I'll stop on that.
Yeah, no, it's interesting. So, again, my oldest son is 10. When he was maybe about 5 or 6, I said, do you know what Daddy does for a living? And he said, yeah, you sit in front of a computer and you type. So I think he understands a little bit more. I still don't know that he gets it entirely, but I think he understands a little bit more I do a little bit more than sit in front of the computer and type. I do these interviews. And, you talk about mindset, and I've talked about on my show before that I was diagnosed, we're in April as we record this, in October. So what is that? 7 months ago, yeah. I was diagnosed with diabetes and totally changed my outlook on everything. But I went, instead of, oh my gosh, I've got this, let me take drugs and let me do this. I went the other direction and said, there you go. BS. I don't want to take drugs. I'm afraid of needles. I don't want to give myself shots. And so, right. The good news is today my sugar's under control. I'm taking a handful of pills, but no needles, no insulin, no shots, no nothing, because the mindset of I'm going to take control of this, and to apply that now to the financial world, I'm going to take control of this. I'm going to take control of my finances. And I think that's really what this show is all about, is you're in control, like you've done, like other people have done. You're in control to create whatever lifestyle, whatever finances, whatever future you want to create.
Yeah.
As we sort of get to the end here, is there anything I didn't talk about? Anything you want to? I know you've got an offer for the listeners if you want to talk about that, but is there anything else that we didn't go over?
Oh man, we could talk for hours, Sean. I have a feeling. First of all, thanks for sharing that story about your diabetes. I think you're probably one step away from actually curing it. It sounds like you've got the right mentality and you can reverse it. I totally believe that.
Oh yeah,
I know a lot of people that have. So you're one step away from that. So
congratulations
on that. The bottom line is, as a wealth architect, we like to build things from the foundation. I deal with 7 and 8 figure entrepreneurs most of the time, but I also like to educate people about financial things, because I think that you can take your power over if you just get a little bit of knowledge about money. And money's fun. You got to make it fun, and it can be fun. It's like this Bitcoin thing, right? A couple of years ago, I was one of the other people that was, it's going to get hacked, it's going to get regulated, blah, blah, blah. I had all these objections. And then I dove into it and I learned that it's a whole new world, and I'm actually fascinated by it. And there's a ton of opportunity. It's like the internet was back in 1995, right? It's right at the beginning. I know people think it's late, but it's right at the beginning. So I'm really excited for that. So that building that foundation is really a critical component, and how to build it is getting financial education. I did set up a page for your listeners because I want to be able to at least expose them to some financial education. You can go to my site, you can get there's lots of free stuff. I'm going to give you something if you go to this URL. Ready? It's go.bit.ly destinycreation.com/crushing debt, all in lowercase, right? Crushing Debt for the name of your show. And that on there, we'll have not only this podcast, but we'll have some notes and we'll have some goodies for you. And if you want to roam around and find some stuff and, get involved with me, and every week I'll probably send you a story about someplace I've traveled in the world or whatever, we get to know each other maybe if that's what you want. But the bottom line is just to start exposing yourself to something, whether it's me or a bunch of stuff on YouTube or listening to this show more. You're doing a great service to people by at least bringing to the front of their minds that they need to decrease that debt, right? I don't believe debt is bad, frankly. I believe there's good debt, bad debt. You've heard all that stuff.
Right.
And I think debt can be phenomenal. A phenomenal tool for leverage. It can cut both ways, but I think it's an excellent tool, especially in our credit-based system, right?
Yeah.
Anyway, I laud you for the work that you're doing and the messages that you're getting out, and glad to be a small part of that. So
yeah, thank you. I appreciate that. And for those that, it's pretty easy. Go destinycreation.com/crushing debt, but I'll also post that in the notes. So if you missed it, you can always go to the notes and follow that link. So wow, thank you. I really appreciate you being on the show, and thank you for the conversation.
This was a lot of fun. I enjoyed it.
Yeah, absolutely. I do want to, before we sign off real quick, I do want to talk about our second sponsor. He's the one that edits the show. His name is Mark Purvis. He's got a website that he's set up called legacyspotlight.com. Mark is an Emmy award-winning videographer with over 23 years of experience in marketing and advertising. What legacyspotlight.com is a website where he can help you capture and create videos and testimonials from family members. So, I've talked a lot about my dad on the show, and as much as I've talked about my dad and how my dad is my hero, also my grandfather. And so what would it be like to capture some of that knowledge from your dad, from your grandfather, from your mom, from your other mentors and family members, to capture that information? I can get lessons from my grandfather that I can then show to my kids and their kids. And so what would that be like? And so Mark can help you with that. The website is legacyspotlight.com. Mark Purvis can help you with that, as opposed to my guest, Mark Yegge, who can also help you create wealth as the wealth architect. So thanks again, Mark. I appreciate you being on this week's episode of the show.
Yeah, it's been my pleasure. Can't wait to hopefully maybe do it again one day.
Absolutely. And so, like I say, towards the end of every episode, and especially given the content of this episode, I hope that at the end of the month you have more money rather than at the end of the money you have more month. That'll do it for this week's episode of the Crushing Debt Podcast, and we will talk to you in next week's episode.
If you have questions that you think would make a great topic for a future episode, please email Sean or connect with us on social media. Sean Yesner and Yesner Law, PL, are Florida licensed attorneys. The information contained in this week's episode is not a substitute for legal advice. Your situation may differ, especially if you are located somewhere other than the state of Florida. If you have questions, please contact our office or contact a local attorney. Thank you for listening to this week's episode of the Crushing Debt Podcast.